What's up, everybody? Welcome back to Market Insights with Linux. Good afternoon and welcome to this very, I wouldn't call it exciting day, but very volatile day in the markets. So I wanted to do a full update on the general stock markets. We'll take a look at the S&P 500, but we'll take a look at some other relevant indicators and some other relevant markets as well, right? So such as gold, oil, the volatility index, basically all the things we need to keep an eye on to actually get a good idea of what's going on today. And what to expect, right? Can we actually expect the prices to go down after basically an uptrend since the middle of April, and especially also an uptrend since the 23rd of May, also on the lower time frames? That's what we'll look at, all right? So we'll take a look at most of these markets on the higher time frames. Then we'll take a look at the general stock market on the higher time frame, on the lower time frame. We'll look at the different scenarios and we'll look at what the possibilities are. Now, first of all, look, the main fundamental news that's going on right now is obviously the escalation between Israel and Iran. And that also means that the continuation for the general financial markets are very dependent on what comes out of that conflict, right? And at this point of time, a lot is still unclear. So we'll take a look at some data and we'll take a look at how the market is looking right now. But the market is very reliant on the development of that conflict. And then of what's going to happen afterwards, right? So if we take a look at some data right here, what you can see is that oil has actually broken out and is trading much higher. Potentially this is a bullish reversal, but I would say it's much too early to say that. But this is dependent on what's going to happen with the conflict, right? If Israel is going to strike the refinery industries of Iran, this will shoot up much higher, which in turn will be bad for worldwide economies, but specifically, or at least what's most important for the S&P 500 and US equities in general, specifically it will increase the chances of a recession in the US by a lot, right? So this is something relevant to watch. At this point of time, as you can see, oil is still trading higher. We have a massive resistance level with the yearly rolling VWAP right here around $75. But for now, on the 12-hour time frame downwards, this is bullish, right? So that's bearish for the markets. Outside of that, if we take a look at gold, which I made a full video on yesterday, in which we also spoke about this potential breakout, gold broke out, right? And on the higher time frames, it was always still in an uptrend. Right, so not only do we have a higher time frame uptrend for gold, but no, on the 4-hour time frame we also have a breakout, which so far has been respected. So that's another indication, that's another signal that there is increased unrest, which goes hand in hand with what we know, right? I mean, this is obviously not a news channel or a politics channel. At this point of time, there is still uncertainty about the development of the conflict and whether there's going to be another strike or potentially more strikes. So as it stands right now, I would say that we have to lean bearish, all right? The data is telling us to be slightly hesitant, or at least to be cautious. Volatility index also dropped down after open, is now increasing. Gold is increasing. Like I said, no, oil is increasing. My apologies. Gold has broken out. So that signals a risk of environment. So then if we take a look at the higher time frames here for stocks, what you can see is that the S&P 500 in general already was at a major resistance level. And we spoke about this earlier this week, or I think last week, that it was unlikely to expect that we would break above this level in the first try, right? So this is the all-time high level. So technically, it's also not that strange that at this point of time, we're going to pull back. So both fundamentally and technically, I would say we have hit a major resistance level, and it's most likely we're going to get somewhat of a pullback. However, the depth and the extent to which we will pull back, that I'm not too sure about. All right, you can see right here with the open, we've pulled back. You can also see in the 1-hour time frame we have lost the uptrend here for the S&P 500. So we're looking at the SPX right now on the 1-hour time frame. So I would say, unless we get some sort of de-escalation in this conflict, I would say it's most likely that, which is in line with the fundamentals and the technicals, that we are going to drop down lower, where the first support level would be around 5,920. And that's the first level where we will look, all right, well, do we get a strong reaction from this, yes or no? If the answer is no, and if there's still no certainty, we'll drop down lower into this main support level right here, around 5,850. But for now, I do think a decrease in the general markets and a continuation of this uncertainty is most likely. So hopefully that helps. That means that, risking off is most likely the best decision. But that's it for now. I'll keep you updated on this for sure. But for now, thank you for watching. Take care, and I'll see you all in my next videos. Bye.